It's heartening to see this panel, you know. I mean, of course, the content is great and the number of people also. So we know we're talking straight, we're cutting right to the point, which is making money, how D2C brands stay profitable. Largely, that is the moot point of this conversation right now. And all of you have, of course, your success journeys. And if you look at the last 2 years, we have seen how the D2C revolution has come up, you know, even bigger brands. It has such a pull that even bigger brands that have been around for 50 to 60 years, they are taking cue and changing their business patterns. So a very important aspect that how do you stay profitable in a D2C business? It's a common question, but there are, of course, individual stories. You have your own context to bring to the table and the audience can benefit from it. Let me start with you, Vikas. If we talk about a D2C brand that is scalable, that stays profitable over a period of time, not just momentary, is there a playbook? Is there a playbook that you can look at? I want to start with you, Vikas.
So my company is profitable is last 3 to 4 years. It's PAT positive. So we are profitable, first of all, in the D2C space. I can give an example of my own journey. A couple of years back, I was in a bad situation where I've run out of money, high liability, minus 40% EBITDA, and on the verge of shutdown. I come from a business family, from Mawali family. I was never convinced like how could business and run on the losses and all. Then we tried, okay, go back to the business, basics of the business, which apply to any kind of a business. And how turn out the company from within 2 years minus 40 to 10% positive EBITDA. How I done, so it's very clear like what should be the unit economics, first of all, to run the company because we don't have money. So we decided we give it to the team, like how should be unit economics. Second, how should be the cash flow. Then I stop CODs and all, then how company, you know, I need money every second day. Third factor is very, very important whenever you're doing, you have to build a brand. You know, what happens sometimes you under pressure, you start taking a wrong decision. I figure out like if you have a brand, any ups and downs comes, you know, either money or don't worry, you're going to survive, not going to have much impact. And that's how we, even with these changes, it's very clear we have to create a differentiated product. So we move everything in-house, we were doing outsource manufacturing and all, everything, content creation, the team, the product designing, you know, and it's very clear given to my marketing team, this is going to be CM2, how much you're going to spend, we need this kind of economics. And thus it's got into the blood and now still like we're growing 100% last two years and we raise very minimum fund. And that's how we're following. So
right.
Yeah, that's everything.
Jigar, your thoughts?
So echo what Pankaj said. I think profitability and focus on business first principles is literally the way to think about monetization or making D2C profitable, right? I think that laser sharp focus on unit economics, gross margins, your margin profile. Yes, you may want to discount a little bit early on in terms of sort of getting that awareness going, or just people wanting to sort of, or allowing people to try your products, but that should be done in a very, very disciplined kind of a way. And I think there is no secret to it. I think the focus on business first principles is really the way to go. And that's something that we have been very, very careful about from the word go. We have consciously designed the business where the solutions that you have to offer to consumers have to have at least unit economics positivity, right? Otherwise, somewhere the business by design is a little bit flawed. And then you're always playing a catch-up game, always sort of climbing up the slippery slope, so to say. So yeah, I would sort of say focus on business first principle is really the way to go in terms of monetization.
Stick to the principles, the basics. Maniraj, what is the rule book for you? What has been your journey like?
Allow me to introduce myself. Everybody might not know me. So I run Amitoj India. We're one of the leading point of sale display design and manufacturing firm in the country, working with over 600 brands. And our USP is our innovation, okay? And that's actually the defining characteristic of our brand. And D2C is close to heart because around 10 years ago, I started an online brand called Made in Health. And we were selling health supplements, and that got acquired by a health cart. That's like way back. And actually, I'm so happy to see that this community is growing, and I'm able to serve this community right now. Coming to the profitability and the business part of it, see, we're a B2B company. We service brands directly. So we have the luxury of knowing who we are selling to, which is actually, if you see, the biggest defining aspect of a D2C, right? B2C brands have been there for the longest time. But unfortunately, to scale, they had to adopt a model where they might not know their consumer because they had to go through these channels like distributors or retailers. So they did not have this luxury. What technology has done, and that's why this term D2C has come in just now, right? What technology has done is that it's given you an opportunity to have something which is online, and so that you know what your customer is doing, okay? This is the first piece. Now, for any brand to be profitable, we need three things. We need a good product, okay? According to whatever purpose you have, whatever problem you're solving, you need a good product that resonates with the audience. You need the right messaging, and you need the right price point. I think if these three things are set, then whether you're offline, whether you're online, doesn't matter what the channel is, things are going to flow. And once things start flowing and you bring in efficiency, profit is inevitable. Okay, if you're giving a good product, you're giving it at a good price, you're selling it correctly, why will your business not be profitable? Tell me. So basically, what this D2C model has done is that given this luxury to maybe brands that could not do it earlier, or brands that have started just now, to understand exactly what the customer is looking for. Okay, and playing with these three levers, right? What product to make, how to market it, what price point to sell it. A brand can understand where do I set these levers, and I think any good entrepreneur, profitability is going to follow. That's what I feel.
Of course, but I'm sure it's not easy to find those things. It takes a lot of trial and understanding. Of course, it's a journey itself. I'll come to those questions. Let me go to you, Siddharth. What has been your journey of profitability, journey to become a profitable company?
Yeah, for me, I think I've come from a background where the basic principle of making business was to make money. So I don't know why this this has even been spoken about. I think every brand will eventually get profitable, and businesses obviously mean creating money, right? No one would start a business to burn money. But I think there are a lot of factors that you'll have to look at when you start any business. One is who is your target audience like, and what do they need? And if you can solve that problem, obviously your scale and profitability chances are higher. Your average order value needs to be really good, where you have that buffer for marketing. For example, a 500 rupees t-shirt selling brand cannot sustain online because his CAC would be, say, about 700. So I think your average order value, the kind of repeats that you have, and the kind of customer loyalty that you can bring in. These are the three, major things that has worked for us. And we've been growing at least 10 to 15% month on month profitably. So I'm sure that if we can do it, a lot of brands, every brand should be able to do that.
Okay, Bharat, when you started out, of course, coffee is still not the number one drink, for the Indian consumer. But of course, it's growing. Of course, when you started out, there were already so many brands, and attempting to disrupt the same category and then build a success story out of it. What took you from that point to where you are now?
To a lot of your points, I feel profitability is the holy grail, right? Everybody wants to achieve profitability. What capital brings in a business, especially that's direct to consumer, is speed. Sometimes, and I'll give you this example also because when we entered, we were in a category that was already duopolistic. So there were two large players that owned about 70% of the category. So for us to first of all break in, even have the aspiration of breaking in a category that's already well established, there had to be very, very crystal clear gaps in the market. But that was just an entry point. For us to be able to really crack the code, build loyalty with the consumers, get an entry point, have the availability, and also at the same time, package all of this with layers of brand building, and that is either a highly time-consuming effort or a capital-intensive effort. So for us, we started in 2018 building the product. 2019, we launched successfully. Commercially, we started selling. And this is the fourth or fifth year of the business in terms of commercially selling. And we've grown at about 500% averaged out year on year. That would not have been possible, the kind of customer loyalty that we've been able to achieve, the number of customers that we've been able to kind of reach out to. And our category predominantly sits offline. We can build a small, cute little business online, maybe a couple of crores, but that would not suffice my own goals. So sometimes, to answer your question about profitability largely, and to also serve the purpose of helping entrepreneurs here, profitability is inevitable for you to survive long term. That's the default status quo that everybody should aim for. But at times, initial investments are required to really build a brand quickly and to stand out, especially in the D2C category where copying and Me Too is very, very common because the barriers to entry are low. That's how I looked at the category, and that's what we have done.
Vinayak, your area of operation is slightly different. You are helping D2C brands get that customer quickly. What have been your learnings from the services that you offer that you would like to share with people here and people on the panel?
I'm Vinayak, founder of ByteSpeed. We actually work with D2C brands, about 2,000 odd brands globally. And we help them set up a revenue channel on WhatsApp as a means to reduce dependency on ads. So I think on the profitability topic, right, I think, so there are some things that have been interesting for us to also see. Profitability, so I think the biggest blocker to profitability as brand scale is the amount of money being spent on ads, because that ends up being like the primary channel. Of course, over time, brand sort of scales and then your cost of acquisition goes down. That's there, and there are efficiencies in the supply chain. But beyond that, if you were to look at where do we get growth profitably, I think one is getting the right channels in place. So if you're spending a lot of money on ads, I think that's something you can't control. You have to spend that money to get top of funnel traffic. But the conversion rate for most brands on the websites is like 1%, 2%. That's where if you just like get it to like 3%, 4%, if that's possible, it suddenly like brings up your sales 2x and like brings up your ROAS too. So that's where we have seen like interesting stuff. I think one thing that's been interesting over the past couple of years for us has been brands building lists. So in the US, when brands are at scale, they drive like about 20-25% of their revenue through own channels like email, or now SMS has really picked up there. In India, this is relatively new. Like we have email lists, but I don't think they have performed as well. WhatsApp is a channel that has opened up very recently, and initially there was like everybody just like doing a lot of abandoned carts kind of stuff. Recently, we've seen that brands that have deployed WhatsApp as a long-term channel, they've built lists on WhatsApp. So if you have like 100,000 people, let's say, coming to your website, using interesting widgets, interesting pop-ups, you can get like 10-15% of them to opt into you. And then that really compounds. You're adding like 10-15,000 people to your list every month. After a year, you have like a database that's like hundreds of thousands. So these are some things on just like finding channels that can scale. And beyond that, there is, of course, like using the data that you are collecting being a D2C website to then send content that's like personalized and targeted. But yeah.
All right. Lovely music, yeah, good. Bharat, let me start with you. You know, we're all agreed on profitability, but I want to dig deeper and say that, I mean, it's easy to talk about profitability, standing out of clutter, you know, and build that company. But, you know, if you see over the last couple of, I mean, in the recent months, in fact, you know, the cost of customer acquisition on digital has really gone up. And as a D2C brand where digital is a key focus, you know, how do you align your brand strategy to stay profitable? How do you pivot and address the rising cost of customer acquisition?
You know, so many brands, I'm sure a lot of these brands are sitting here also, they have no option but to sell online. And this is where the opportunity, and this is also where majority of the challenge is. Most categories that are easy to enter with low barriers are also can only be scaled online. The moment you even think of going offline, you know, there's crores that need to be put in. Even if you're doing your own EBO, if you're doing MBOs, if you're doing kind of retail formats, traditional channels of sales. So the first thing is that when any one channel disrupts your business, the question that a founder needs to answer is the dependency on that channel. How can they reduce it? So that's where the starting point is. How can you reduce dependency on any of these channels? And how can you diversify your channel mix? Because ultimately a brand should be able to sell irrespective of the channel of distribution. That's what a true brand is. No matter where you sell, in which part of the country you sell, you should, if you're focusing on one territory, that's different. But that's what a true brand value, that's what true brand value really means. So if the acquisition costs have gone up, the founders and their teams need to take a step back because it will be unprofitable to sell at a 2x CAC. At a 1.5x CAC, you might break even. I don't know. Depends on the margin profile. But if you do not have more than 60% gross margins and your CAC is 1 point, you know, if your CAC goes up by even 25, 30%, you're out, you're down there. You're just at the neck level. So I feel the founders need to stop burning their money and they need to take a step back and reassess, can we move our focus to retention marketing? Will that lead to better returns eventually? Can we focus more on brand building? Because ultimately the only way to break clutter in the mind of the consumer is to build a brand. So all of these things are there. I can go deeper, but I don't want to take too much time in, you know, harping on this one fact, which is very important, which is the brand should be able to sell agnostic of the channel, and the margin profile should be such that the brand ultimately is able to make money, even if you're investing upfront maybe at some point. With bad margin profiles, no matter how much you spend, no matter how much you, try to build online, sometimes it will not make the cut because every product that's shipped out requires a certain kind of a cost attached to it, which cannot be taken away.
So the brand has to diversify the channel mix, so that makes it doable and profitable, right? That's essentially one of the key points. Siddharth, you know, earlier in your answer you mentioned that, and you were very honest in saying that you know, profitability is what drives it, you know. But profitability, what the entire piece of disruption and startups and everything is also a social impact, you know. As a founder, how do you look beyond profitability at times, of course, or not beyond, ensure that profitability with impact occurs? I mean, or does the founder lose the track of the impact part and is only interested in growing the category, even if it's a Me Too category?
Yeah, I think, see, again, it depends on brand to brand, but what worked for us is what I can share. So we are a 2-year-old company, and one of the first D2C brand to have touched 100 crore ARR within 2 years being bootstrapped. And how did we do that is obviously worked on a lot of engines that are required towards driving that brand loyalty and the kind of customer experience that we give. The number one thing obviously is your product. If your product is not good, no matter how much you spend on marketing, it's not going to work. The second is obviously the customer experience, especially for a category like us, where the market is very cluttered. We just wanted to make sure that we could scream loud and make a difference there. I think overall, it is just the kind of customer experience that you want to give with the kind of retention that you can acquire, and keep building on from there is what is the key. Consistency and just to give you an example, Domino's is not the best pizza maker in the world, right? What they're good at is with consistency in taste, delivery, and the customer experience. I think same with Starbucks, not the #1 coffee makers in the world, but the kind of brand loyalty that they have is incredible. So I think building all of that requires a certain amount of time, and founders need to be patient enough and keep pivoting wherever it is necessary.
Thanks. Maniraj, let me come back to the customer acquisition part of it. How can D2C brands pivot and stay profitable in this rising context of the cost?
So I think the answer, if a D2C brand or any brand for that matter is in a particular channel and they're facing that, okay, competition is becoming stiffer, then the only answer that I could think of is innovation. Innovation can be multifold. One of the first forks of that would be product innovation. So maybe if, let's say you launch something, but that's becoming very commonplace, your profit margin is going to go down, so a high CAC will impact you a lot. But if you can keep coming up with new things that the market keeps needing in alignment with your purpose, then that problem subsides, to a large extent. And secondly, innovation also in the way, things are sold. So I can give you our example from Amitoj India. Because we are primarily a B2B company, our product innovation is always out there, okay? You'll see different products being launched from us again and again. And by the time they become common, people start copying them, we launch a new innovation so that, we're always ahead in the market. So as to preserve our profit margins, that's number one. Secondly, the way that you sell, the channels that you use also have to start changing. So for example, we are probably one of the first people to launch a B2B e-commerce portal for our clients. I have not seen anybody who does that. So we said, okay, all of our competitors are going to clients, they're doing that physically. They're maybe sending emails, hey, look at my products. Why don't I bring people to my catalog base that I've built, which is a B2B e-com. So innovation in every aspect of the business is going to be, that's what you need to stay ahead. And we've seen a huge impact with that.
This is, I think, I built over 3.
Can you bring your mic closer? Yeah.
Is this better?
Yes.
Yeah. So I think what I've seen good D2C businesses are built over 3 main pillars, and that's the sort of framework we are trying to implement at 82 East as well. The 3 pillars are content, community, and commerce, right? So in terms of the rising performance marketing or advertising costs, I think it's important to sort of go back to that basic fundamental framework and trying to evaluate across the 3 pillars, what are the areas where you can do more growth hacking. So if you talk about commerce, which is the most intuitive sort of a pillar, if performance marketing is getting difficult, are we thinking through more retention marketing, right? Do you understand or are you doing enough analysis of how often your customers are buying, what are they buying, the ones that have bought and not bought again, are you sort of paying close attention to them? Are you sending them some sort of a nudge to, a gentle reminder sort of a thing to come back again, right? Cross-selling is another sort of a way, right? If you observe of your entire product basket, there are 1 or 2 products which are frequently getting bought, it is possible, that the customers may not be completely familiarized with other products because you could not have perhaps promoted them enough, right? So cross-sell, replenishment are some easy hacks that one can, look at. I think they are, I think to what Vinayak was also saying, I think they are very underutilized Now we have WhatsApp and lots of tools like the ones that he's also building, which allow you to constantly do that and touch base at a certain non-intrusive interval with your customers, right? So that's more the commerce pillar. Coming to the middle, which is the community pillar, what are the ways where you can engage with a large part of your TG at scale, right? So whether, I don't know, depending on the age group, whether it could be colleges, it could be forums, it could be places where like Facebook groups, et cetera, right? So can you identify some of these platforms where you can engage, do some social listening? I think social listening also as a method of engaging has been very, very underutilized. And try to understand what people and the communities at large are talking about. Have you as a brand spent enough time to build a community, right? Are you basics, right? Are you reading your comments which are on your social media page? Are you responding to your consumers, right? I think these are small gestures which keep your brand on the top of the mind of your consumers and in a way build loyalty and repeats, right? And the last part is content, right? And I think at D2C's, given my co-founder, we have a little bit of an unfair advantage in terms of building great content. But I think in general, since the topic is more sort of broad-based to D2C companies, how are we building content that is, doing a clear job of communicating your brand value proposition, right? Are you building more content that is relatable? Is it touching upon the consumer pain point? Is it engaging the consumer, right? I think those are some elements that one needs to look at and try to do more systematic, disciplined kind of effort across all the three pillars to build loyalty, drive repeats, also, of course, drive more organic awareness. So that's probably like how I would think through reducing your CAC and trying to still scale and be profitable in the age of rising performance marketing kind of costs.
Vinayak, what are your 2 bits on reducing the customer acquisition cost?
Sure. So I think, so to Bharat's point, right, like he was mentioning that the holy grail for any D2C brand is to be able to build a strong brand that eventually drives down your CAC and people buy from you irrespective of which channel you're present on. I think that's the holy grail, but that's not where most brands start, right? I actually think brand is a function of customer growth. So brand is how many people know about you and what do they feel when they hear about you. So you can, the aesthetics and your message and your positioning in the market and what you bring, your value prop is the second part of it. But people still need to know about you and buy from you and then share with the world what they experienced. So you have to acquire customers and you should acquire customers aggressively. If you have to acquire customers aggressively, then what is the cheapest way to do it? And I think maybe at the risk of repeating myself, but the way to do it is to essentially own your audience. To find ways to own your audience, because the cost of marketing to your audience is always going to be cheaper. And one way could be for you to, let's say, like run ads and get people in your funnel into WhatsApp, email, SMS marketing to them. That's like one way of doing it. The other ways might be more creative. Like I was speaking with Vineet from Supertails, and he had interesting ideas around, okay, how do you create these higher order assets? Like they've created consultations where people then come for a lot lower cost, and then you're able to move them further down the funnel. Or let's say what Jigar was mentioning, like if you have Deepika Padukone as your ambassador, things get a lot easier. But yeah, I think those would be my 2 cents.
Of course, that will help you in the discoverability, but then the product will speak for itself. Pankaj, your final thoughts?
I think this marketing is not like sudden increase. It's increase like other commodity product increase, travel, fuel, everything and all. I have seen with many years and all. I will come to that, like how we're going to reduce the CAC. And in last 3-4 years, we maintained the CAC with the growth. Even like when we hire people, I mean they in growth role, they come like 1.5 or 2x is good number. I said, no, bro, I mean this is not going to work, you know. So for my company, it's always clear it's going to be like this number, 18% of AOV and all. We know, we seen like how this is increasing, then I work on like how can increase AOV, then your CAC can be like the similar. I just want to give you one or two examples. Sometimes D2C brand, we too much focus on the product actually. But it's not only product. You selling as a brand is experience which everyone is talking about, every touch point, and if you have a great product and service is not good, nobody going to remember your product. They only going to remember the service. And I think product can be replaced, but not service. So that's very, very important. When we talk about the brand, it is a complete cycle. Like even example of one Hussein Bolt, like he's a runner, great runner, and we know like maybe like legs are the most solid, But somebody asked me, he said, if I run, my every part of body have to be the sync. Then only I can win, So for any brand, every part, team, customer support, product, innovations, everything. And that's a sync, that's very, very important. That's mostly people miss when we running a brand and all. How it comes, for me, I have a clear cap. Like this, we should not grow, this CAC has to be this. Then innovation start, necessity always give innovation. Then team start, okay, ab kya karna hai? Maybe different channels, content, product, different way of doing and all. So I always say when you have a free hand, then, always try.
Frugal mindset.
I mean, Facebook and Google is like high, kitna digital money, paisa dalte raho, you will not, and try to pay this money with your cash. You will remember like, okay, itna paisa ja raha hai. So that's the reason even my all performance market is prepaid, not postpaid. Sometimes what I have seen, like people spend up money, then bills comes and all. So this something you have to put into your process and all, and the brand and all. And always say, end of the is a brand, which as I said initially, if your brand is there, brand it means everything, all challenges will be solved.
So the brand is the entity, and all
Whole
parts of the
experience,
entity have to move equally. Your marketing alone cannot be smarter than the product. They all have to be equally
Everything
smart.
has to be
right?
synced.
Exactly.
Yeah, everything has to be synced.
Maniraj.
Yeah, I'd like to add something. So first of all, absolutely, in agreement with these guys that frugal methods or things like SEO and content and brand, that really needs to be focused on to bring CAC down. But I have a different perspective also on this, is that an entrepreneur cannot necessarily be worried about increasing CAC. What he should be worried about is if the CAC is going down, is the lifetime value stable, or are we able to, because the CAC is going to be increasing for all my competitors also. So we're on a level playing field. So if everybody is doing performance marketing, all good. Can I increase the lifetime value? And I just remembered an example that I want to share from our Made in Health days. So we used to sell a segment of products which were these protein powders and bodybuilding supplements was a part of that. And we liked it when we got, let's say, a first order from a customer, which was 2,000, 3,000. That was a profitable unit economic order. But a lot of times customers used to place an order for a product which was maybe 400. I think it was a creatine product. And honestly, we didn't like seeing that because we were selling it at a loss. But later what we realized is that once a customer buys a creatine, once he buys that 400 products, he comes back much more easily and then buys the 3,000, 4,000, 5,000 product. Okay? So instead of discouraging that sale, we actually started pricing that product, the losing product, even lower. So that, okay, we have a bad CAC, but then we build a better lifetime value for clients. So that was...
Right. Let me ask you one more question, all of you, and then I'll possibly try to take a question from the other side, of the panel who are equally stakeholders here. Again, starting with you, Bharat. Of course, when you start a D2C brand, the initial disadvantage is that discoverability and building that brand recall. How do you build a brand recall that stays? Also, with the choice that customers have today, how do they stay loyal? How do you build loyalty? Is it only price point loyalty? Is it product loyalty? What are you witnessing in the marketplace?
Definitely brand awareness is at its peak right now because of all the available options of, with a very small budget, you can reach out to a large audience today. But brand loyalty is at its lowest right now because it's there's so many brands in large categories competing with each other. So how do you build brand loyalty is a billion-dollar question, because there is not only one or two or three things that you can do which will build a brand, quickly. So the first thing that you need to do is give it time. The first and the foremost thing in any category is that you cannot shove down a brand. You can shove down products or services, but not a brand down someone's throat. It will take time, and it should have cycles of repeats, which also take time for the consumers. So I think my formula is a 1,000-day formula. It will take sometimes 1,000 days for somebody to register your brand and to have them have the brand in the consideration set of the consumers.
1,000 days.
1,000 days, minimum. That's minimum. That's the minimum. I think I missed out the word minimum. So, you cannot, you will see small successes, small wins on a day-to-day basis. But if you want to build a large-scale disruption, large-scale brand in your category, you need to give it time. And while you're giving it time, you need to do many things correct on a day-to-day basis. For example, the first thing is product. Somebody mentioned here, product is not enough. I actually completely, I think Jigar mentioned, product is not enough.
Pankaj mentioned.
Pankaj, sorry. I think the product is definitely not enough, but the starting point is the product. Although in the long scheme, the importance might be 5%, 2%, but the weighted average of the importance is very high initially. So it starts with the great product, the great gap that you have to figure out. Customer love is important. Immense amount of customer love is required today. And you will need to do all of this, and availability. So in my category, even if there are a couple of 100,000 ragers, but if they go to an offline store and they don't find rage there are chances that they will shift, which we don't want. So availability also has to be there. So all of these things, over a period of time, you have to do them right to have a shot at success and having a shot to build a brand.
I like the metric you put, 1,000 days minimum, and it gives a sense that founders have to be, of course, patient. It's not a fly-by-night kind of a thing, which many people think that startups can raise funds and just scale it up. It's not that easy. Maniraj, your thoughts on?
Yeah, to me, this question is very similar to how do you build trust with your girlfriend? How do you build brand loyalty? Is just by being loyal to the customer. So if you want to build trust with your girlfriend, be honest, right? Automatically trust is going to be built. It's inevitable. So in the same way, if we are loyal to the customer, so if our purpose and value is very strong with the brand, you are going to create the product that they need.
So sorry. So the other side has to be loyal to you. How does that happen when they have a lot of choice? I'm saying customers, how do you build their loyalty? Because they are also loyal on the price points.
By being loyal, yeah, that's a part of the answer. My loyalty to my customers, price is a part of that. Product is a part of that, okay? If I go and buy a very good product, but I feel, this company is ripping me off, I don't think they are loyal to me. But I get a very good emotion, I feel, wow, what a product, what a price. Okay, I've got, it's a package deal that I got. That's when I feel, okay, this brand understands me. And, eventually you can't control what they're going to think. You can only control what you're going to do. And so if my brand has that in its purpose, in every small action, like he's saying, you have to do a lot of small things every single day. That comes when I have it, deep inside me. I'll automatically start doing those things. And I'll make mistakes, but I'll make them right.
Pankaj?
I always say that D2C brand product is the first thing, is always key. Like that has to be differentiate. I'm saying, but sometimes we get into so much product, we miss other things as experience and all. And always say, as a D2C terminology now, I mean, when we talk about any retail brand, I completely agree, take decade to build, And sometimes we are so much hurry, and because of hurry, so much pressure and all, we start doing mistakes. It's very, very important to have a patience. Take any example, any retail brand, less than a decade. It takes more than a decade. So it's very, very important, don't to be hurry, and understand what is the brand and all. And most important is innovations, understanding and all. So I just discussed earlier. So keep innovating, keep differentiating. That's very, very important. And either Amazon is there, anybody is there, nothing going to happen. Trust me. ये पहले भी था, अभी भी था, आगे भी रहेगा. You have to be different in every sense. The product, team, innovations, the content, and you start winning. Once you stop, and every company is actually, take example of any big leader, like Nokia is a big example. It's not about any big or small and all. You stop innovations, you die. It means every day you have to be innovations and all, just grow and you build a brand and all. Yeah.
Lovely. So 4 minutes I have. Vinayak?
Yeah, so very quickly, I think brand loyalty, largely it's about staying true to a promise. And you could stand for anything. I'll share a very short example. I think in the past month or so, I've taken maybe like 8 to 10 flights. I think one of those or two of those were maybe Air India and the rest were Indigo. Indigo, every time I was on time, I got the experience I wanted. Air India, the first flight I took, there was a protest going on outside the counters because the previous flight got cancelled and the other people didn't want the next flight to go, right? So I'm going to book Indigo. I think that's brand loyalty.
Some quick words, Jigar. I have literally 1 minute. I'm being shown the timer here. Yeah.
So I think I agree largely with all the points that are being said. For D2C companies specifically, brand loyalty, I would say, I think in the initial days, if you're able to understand what your hero product is and then trying to really nurture it, I think product really is the king. And a customer is at the end of the day paying for a product, right? So if you identify the hero early and nurture it, I think that's probably one of the ways to build brand loyalty.
Siddharth, 30 seconds.
Yeah, I think more or less synced with everyone. It is just, delivering what you promise. If you say your returns and exchange are going to be hassle-free, make sure it is. You'll have to just deliver whatever you promised, and brand loyalty is a longer journey. You need to be very patient, and then, it's going to happen over a number of days, years, etc. So I think patience and innovation is the key.
Patience, innovation, and I can't even sum it up. Okay, thank you so much, everyone, for being here. I can't even take the names. It's like a team and not a panel. Thank you so much, everyone. Aditya, over to you.